Investing can be daunting and risky. Venture, it takes a lot of courage to put your hard-earned money into the unknown with the hopes of making a profit, yet throughout history we have seen countless examples of investors who have taken that leap of faith and reaped the rewards. Imagine being one of the lucky bulls who bought Tesla in 2009, but what if I told you that you could be standing in similar shoes to those lucky bulls still early in the grand life cycle of Tesla, the world's greatest ever corporation? Let's look into why a minor investment in the company could have you reaping huge returns from the Goldman Sachs bullish price target to Cathie Wood's outlandish $3,000 per share evaluation. We'll explore the different factors influencing Tesla stock and try to make sense of it all. Oh, and did we mention the rumor regarding the fully automated ride-hailing network called the Tesla network that could make the company even richer? But before we discuss all this, make sure you smash that like button and subscribe. Wall Street has had some ups and downs with the stock market in recent months. Things by and large don't seem to be as bad as they seemed when the Fed enacted a series of rate hikes in late 2022. As for Tesla, many seem to be willing to buy the shares for 50 times what Tesla earns per share. How likely is it that Tesla shares will be as valuable as everyone says they will be? Let's start looking for clues from January 2022. Let's hear Mark Delaney's thoughts first. Mark Delaney is an analyst at Goldman Sachs, a global investment banking, securities, and investment management firm. He covers the automotive and transportation sectors and is known for his coverage of Tesla in January 2022. Mark Delaney raised his price target for Tesla stock from $375 to $400 while keeping his buy recommendation. He believes that Tesla is outperforming and has the best idea for an electric car. He also thinks that the fact that people all over the world are becoming more interested in electric cars is good for Tesla's bottom line. Aside from Mark, Cathie Wood and Elon Musk himself have been in an agreement. Musk has told his employees that he agrees with Cathie Wood's ARK Innovations' $3,000 per share valuation of Tesla, assuming the company stays on the right track. Cathie's been a Tesla bull for several years. She started buying Tesla shares in 2013 and has been a vocal supporter of the company ever since. Tesla is one of the largest positions in several of her ARK Invest funds, and she's predicted that the stock will reach much higher levels in the coming year. Even though electric cars from Ford, GM, and Toyota are coming soon, well-known investor Cathie Wood still has a lot of faith and is one of her favorite companies. Tesla. As Tesla continues to push the boundaries of what is possible with electric cars, it's clear that Cathie Wood's faith in the company is well placed, and it seems that the market agrees with Cathie Wood's assessment despite the competition. The Tesla stock price continues to climb despite the ups and downs it might experience in the short term. Tesla's Perspective robotaxi business line is a key driver, contributing 60% of expected value and more than half of expected EBITDA earnings before interest, taxes, depreciation, and amortization in 2026. ARK stated across our simulation set we expect electric vehicles to constitute 57% of the company's revenue in 2026, albeit a substantially lower margin than robotaxi revenue. During the grand opening of Tesla's $1.1 billion factory in Texas on April 7, Elon Musk made an ambitious promise. He declared that Tesla was developing a new car that would be a dedicated robotaxi with a futuristic design capable of operating without anyone inside. The robotaxi in essence would be a robotic version of a ride-sharing service like Uber or Lyft. While Musk did not reveal a timeline or any visuals, he did state that Tesla's car would be capable of driving themselves by the end of 2022, with full self-driving FSD being a crucial factor for this. However, ARK, a fund that invests in disruptive innovation, cautioned that the simulation they conducted was highly dependent on the year Tesla launched its robotaxis, and they predict that Tesla will commercialize autonomous ride-hail in 2024. Piper Sandler showed Tesla some love on Valentine's Day by raising its price target for the stock. Piper Sandler is a financial services firm based in the United States. They provide a range of financial services, including investment banking, equity research, and asset management. Piper Sandler has been relatively bullish on the company in January 2022. Piper Sandler analyst Alexander Potter raised his price target on Tesla stock from $400 to $410, citing increased confidence in the company's long-term projects. Potter noted that Tesla's market leadership in electric vehicles, its progress in autonomous driving, and its growing energy storage business were key factors in its bullish outlook. Adam Jonas, an analyst at Morgan Stanley, says that the market for electric vehicles is like a race right now, and Tesla's in the lead. He compared it to a marathon, saying that Tesla is at mile 21 and everyone else is either at mile 2 or still tying their shoes. Jonas says that Tesla's recent record deliveries of cars show that the company's position will get better as the race goes on. He thought the automaker would sell about 2 million cars in 2022, so he raised the price. He thought the stock would be worth from $400 to $433. Also, to meet rising demand, Tesla opened 2 new factories in the last couple of years, one in Austin, Texas, and the other in Berlin, Germany. But Tesla's latest venture is said to be larger than the previous ones and involves the construction of a new gigafactory in Nuevo Leon, Mexico, which is expected to become the world's largest electric vehicle production facility with a $5 billion investment. Governor Samuel Garcia of Nuevo Leon announced that the final permits for the factory's construction were close to being issued, and Tesla could begin construction as early as March 2023, according to the governor. Vehicles could be produced by Tesla in Mexico as soon as next year, with company CEO Elon Musk announcing plans for the production of a next-gen vehicle. Tesla has not yet provided details of the production timeline. All of these changes will help the company make more money and make things faster with the new plants in Berlin, Austin, and Mexico. Tesla will have more chances that increase gross margins, which it could then use to improve its customer service costs. Net worth growth has placed limits on the company's growth, but we are sure that Elon Musk will be able to handle any problems that may come up in the future for the company. It'll be interesting to see how they deal with these problems, even with tax breaks and other government incentives for alternative technologies. The price of a Tesla car, for example, is still too high. Reviewing all recorded production numbers, delivery percentages, and deliveries, some experts' forecast for 2023 includes 90,000 deliveries from Model X, 700,000 from Model 3, and 1.1 million from Model Y, as well as Tesla's new model vehicles, the Cybertruck and the Tesla Semi. Tesla will likely deliver 5,000 Cybertrucks in 2023, but that number will increase to 50,000 in 2024 and 4,750 semi-deliveries if all these models continue to sell well. The gross revenue of Tesla could go up early on. Tesla's management had trouble because they didn't have enough batteries to power their goods. The problem the company is having with batteries should be fixed by the factory in Nevada. The proposed footprint of the lithium-ion factory is more than 1.9 million square feet, and it will help increase the number of Tesla cars made each year to more than 500,000. In the market for electric vehicles, there's now more competition. Mercedes-Benz, Volkswagen, Subaru, Ford, and BMW are just some of the big automakers that are planning to sell electric cars in the next few years. Ford, for example, has the Mustang Mach-E, an electric crossover SUV, and the F-150 Lightning, an electric pickup truck. Mercedes offers the EQ, an electric SUV, and the X, an electric luxury sedan. Subaru has an all-electric Solterra SUV and is developing it in partnership with Toyota. BMW produces several electric models, including the i3 compact car, the i3 electric SUV, and the i4 electric sedan. Additionally, many other automakers have plans to release more EVs in the coming years as the industry shifts towards electrification. When this happens, there will be more competition for Tesla's market share, and tech companies may also join the fight, even though they still have a long way to go. It's good to see that Tesla is so far ahead of the other companies right now. If you own Tesla stock, you could be sitting on a lot of money. Feel free to tell us what you think in the comment section below. If you think this video is helpful, hit that like button, and don't forget to subscribe.